been a dismal Q4 for Indian IT companies. Wipro and Tech Mahindra posting earnings that have missed estimates, capping a quarter where all Indian companies struggled as clients cut back on discretionary spending. Wipro warning that growth is likely to contract in the first quarter of this financial year as well. Tech Mahindra managed to report a marginal revenue growth of 0.3%, but deal wins have been the lowest seen in the last 9 quarters. Now, before we bring you the IT report card, here are the Wipro and Tech Mahindra managements on the reasons behind a difficult Q4.
Looking ahead, we believe the macro environment will remain challenging. Our clients, our industry, many sectors are impacted by the prolonged uncertainty in the economic environment. These headwinds are impacting our business and projections as well. For the next quarter, we are giving a sequential guidance of -3% to -1% in constant currency.
All 5 large-cap IT companies have now reported their numbers, and the report card does not look very good. 3 out of the 5 IT companies have actually reported a decline in their top line this time. The 2 numbers which have just come out, Wipro and Tech Mahindra. So let me start with Wipro. Wipro has clocked in a revenue decline of 0.6% on a quarter-on-quarter basis. But the bigger miss is in their June quarter guidance, Q1 FY24, where they're saying the growth will either contract by 3% or contract by 1%. So in the best case, Wipro is expecting a contraction of 1% in the top line, much worse than the 0.6% contraction that they had in the prior quarter. So even as a Q1 guidance is a howler and much lower than consensus expectations, the company has gone ahead and announced a buyback of 12,000 crore, tender buyback at a price of 445 rupees per share, a 19% premium to where the stock closed, and that could allay some nerves. Let me move on to Tech Mahindra. For Tech Mahindra, the revenue growth has come in at 0.3%. So it's good, at least they have a growth, because Tech Mahindra and TCS are the only 2 large cap IT companies which have managed to grow the top line this quarter. But the margins have come in as a big miss. Their EBIT margins reported at 9.6%, the lowest in the last 23 quarters. But this is on account of an impairment charge on one of the carrying values of their older platforms. You strip that out, margins are at 11.2%, but still down 80 basis points on a quarter-on-quarter basis. And deal wins too have moderated. Deal wins for Tech Mahindra were in a range of $700 million to $1 billion, but this quarter it's fallen by 26% to $592 million.
All right, Reema, thanks very much. That caps up a challenging Q4 for Indian IT companies. But